Today we're going to talk a little bit about a couple companies that have an earnings report coming out tomorrow, Monday. And obviously, I'm not a financial advisor, therefore do not take my words as advice. So contact your financial advisor and don't sue me, please. But before we get started, let's get some coffee. First, let's look at a stock that will have an earnings report before market open with the ticker symbol of DUK. This is Duke Energy Corporation, which is going from around $86 a stock and is still under about 5% in the 1-year chart. It still hasn't gone to its pre-pandemic levels yet, but it's pretty close to it. In the 5-year chart, you can see that it's up 14%. Since this company is a utility company, it doesn't have much of a volatility. And since we know about low volatility companies, it does have a high yield dividend at 4.46% with a payout ratio of 76.40%. They have been growing their dividends 3.52% for about 9 years, which is great. Obviously, 9 years of growing your dividends, like who wouldn't have that? Therefore, if the stock takes a plunge after tomorrow's earning report, is definitely something you might want to look at and probably add to your portfolio for a safe dividend and overall good company. The second company I want to talk about, obviously we've been on the lookout for a while now, is Workhorse. They also have an earnings report coming out tomorrow before market opens. They're currently priced at $16.52, with just being down 0.72% in the past week. Last Tuesday, it had a great spike going around $19 per stock, and then it came back down, coming from a penny stock at around $2.60 to being around $16.59. It's great. But we do have to see how their earnings report tomorrow will affect the overall price of Workhorse. As we know from before, Workhorse might be able to get the contract with USPS, with their $6 billion vehicle upgrade that has to be 75% emission free. But investors will be hoping for strength from Workhorse as it approaches its next earnings release, which is expected, obviously, August 10th, 2020. On that day, Workhorse is projected to report earnings of negative 12 cents per share, which would represent a year-over-year decline of 20%. This can mean that you can start your position in Workhorse when the projected numbers are down, and then sell when it spikes later on when hopefully they get the contract from USPS, or keep adding to your existing position in the company. We have Dwayne Hughes, Workhorse CEO, explaining in the video what he is expecting in the near future for his company. So yeah, let's get right to it.
Joining us now is the CEO of Workhorse, Dwayne Hughes. Dwayne, great to have you with us on the show.
Great to be here. We appreciate the opportunity to be with you, Melissa.
You know what is amazing about this story, Dwayne, is that your stock, you've been public for about a decade and nothing, and then all of a sudden in the past few months, it's just gone high. It's gone from 2 and change to 16 and change where it is today. What do you think accounts for this rise? Is it a match in a change in the fundamental state of your company?
It's a combination of things, I believe. There's been a big spotlight shown on the electric vehicle space. You mentioned we're out of Cincinnati, Ohio, and it's been really difficult over the years to scream loud enough as an automotive OEM out of Cincinnati to get the attention we feel like we deserve based on the performance of our vehicles that have been on the road with more than 6 million miles. But again, that spotlight that's been recently shown through different SPAC vehicles, such as the Lordstown announcement, that brings additional attention to us and has given us an opportunity to demonstrate our proof of performance and the things that we've been doing well and continue to do well. So I'd like to think that a lot of it is because of our performance as a company, but it's also just that people are taking a much higher profile view of the EV space now.
Right. And we should note that you're going to report earnings on August 10th, so you can't get too deep in the weeds on specifics, but I do want to talk about your business and maybe some of the reasons why the stock may be rocketing higher at this point. Can you talk to us about your expected production ramp and the bookings that you have so far? Between the fourth quarter and the first quarter, we saw a pretty steep decline in the dollar amount of vehicles delivered, 364,000 to 84,000 in the first quarter. And I'm wondering what you see as the trajectory going forward.
Yeah, that's a great question. I appreciate that. In reality, we delivered our first vehicles in March of 2015, and we delivered our Generation 1 electric vehicles through December of 2017. At that point, we, I'll say, took a pause and paid attention to our customers, did a lot of learning over the experience of having those vehicles on live duty routes, the 6 million miles I mentioned before on the road. And we were able to really identify what the electric vehicle of the future really is for our commercial fleet customers, primarily in the, the parcel delivery space and the last mile delivery space altogether. So since our redesign, which I see you showing on the screen there, and identifying things such as the weight of the vehicle. For example, a combustion engine step van that's used for parcel delivery today, they weigh about 11,000 pounds before you put the first package in it.
Right.
What we identified was the ability to reduce that weight would allow us to right-size the battery pack, give us a better opportunity, as well as our fleet customers an opportunity to have a stronger ROI and a total cost of ownership savings. And so taking on the things that differentiate us, such as those weight savings, have given us an opportunity to now move into production this year, where we've already delivered the first 2 of our Generation 2 vehicles. And we're really loading up, if you will, to deliver primarily in the fourth quarter of roughly 300 vehicles this year on a backlog of roughly 1,200 that we have currently and continuing to grow.
So you've delivered 2 vehicles so far. You aim to have 300 by the end of this year. Is that
correct?
Okay.
Correct.
In the meantime, Dwayne, I want to talk to you about your cash position. You ended the previous quarter. I understand you have another quarter that you're going to be reporting shortly with $16 million in cash. All your expenses have gone higher in the meantime. Cost of goods sold, SG&A, research and development. You're burning cash. How long is that $16 million going to last, especially as you are ramping up to go from 2 delivered to 300 by the end of the year?
Very good question. And I think we publicly announced just the other day or a week or so ago that we have over $100 million in cash at this point due to a new financing we brought in addition to the warrants that came in cash. So we are in our strongest position. I'll say it this way. For a company with the most amount of electric trucks on the road given any other company in the U.S., we are now in our strongest cash position that we've ever been in. And we feel very good about our position in cash as well as our ability to deliver on the orders. What
can you tell us about the status of the U.S. Postal Service potential contract? That contract could be worth as much as about $5 to $6 billion. You could get a partial award. You could get a full award. You submitted the RFP, I think, mid-July. When will you know? Your CFO recently said that this award would be transformative for the company. I mean, I would imagine that would be so if your cash position right now is about $100 million. I mean, that contract could be, truly changing for your company.
Yeah, I would say any contract like that would be changing for any company virtually. In our case, we're unable to speak about the post office at all. I have to say no comment because, we're under a gag order of not to talk about it. But certainly, to your point, any contract that's worth billions of dollars coming into a company like ours would be a very, company-changing experience. When
do you expect to hear?
We don't really have a timeline for that. Publicly stated, the post office had their original information was, I believe, somewhere in that 90-day range after the RFP responses, but that was part of the program from the very beginning, so we do not have an answer to that today.
Okay, and if you got that award, that would be 300 by the end of the year plus whatever it is for the Postal Service?
Correct.
Okay. Dwayne, great to speak with you. Hope you'll come back on the show sometime soon.
Yep, would love it. Thank you for taking the time, and have a good day.
You too. All right.
Well, there you have it. CEO of Workhorse telling us what he expects in the future for the company. And we should also be aware tomorrow morning on the changes of Workhorse just in case we want to make a position in this company. Anyways, thanks for tuning in, and don't forget to share this video, obviously for the YouTube algorithm. Until next time on Coffee and Stocks.